Okay, there, I started the recording again. All right, now let me try and share my screen.
There you go, I can see it.
Perfect. Let me just get rid of this too. Okay, just quick thing, you can see my slides, obviously. Good to go.
Yeah, I can see them, so.
Okay, right on. So, okay, awesome. Well, appreciate you guys having me on here tonight. Hope you guys are all having a great weekend. I just kind of want to do a quick poll in the audience to see where people are at. This will kind of dictate how much time we'll spend for both new traders who haven't been around with journaling and people that have obviously experienced journaling, whether it's in written form or with the software there. So if you just type in the chat, do number 1 if you have, and number 2 if you've never journaled. Get an idea of here. Okay, right on, Justin.
We got gonna have a lot of shy people. That's okay. I know
yeah,
that
it's all good.
A few people on here already have it. So
yeah, okay, perfect. So if I do go too fast at any point in time, just let me know, and I can go over the more technical things in further detail. But what I'm going to do is basically jump into why we even want to consider journaling, right? Because a lot of times, and I've been in this position before a lot too. Maybe you guys have been in this position where you feel like it's just a waste of time almost. You get in this rut where you just don't really know why you're journaling in the first place because you can't get answers. Or maybe it's just the fact that you don't want to face spending the time to know that you messed up on certain aspects of your trading. So biggest thing we have to understand is that we're in a data oriented profession, right? At the end of the day, we're dealing with numbers on a consistent basis. And if we don't know what our own numbers are telling us, then we don't truly have an edge in the market and how we're trading there. Now, the biggest thing I tell traders and why we want to be using a journal, it's not going to show you to make more money, but it's going to make you aware of the bottlenecks in your data. So like you said, it could be something to do with FOMO and chasing into trades, which causes you to have a lower risk to reward, lower expectancy, and then, obviously have other issues that are a cause of that symptom there. It's just like a car, this is another analogy I like to tell the traders is, you can go and drive a vehicle as long as you want and maybe try to get by without doing an oil change or getting gas refill in it. But sooner or later, you're going to get into some trouble and be stuck on the side of the road there. So in the same manner, we want to be staying on top of the oil changes, staying on top of refilling our gas every week. And I always tell that to traders. Doesn't matter if you're an all-star guy making 7-8 figures a year, or you're a person that's just trying to make $1 a day starting out on a small account. We always have to be adaptable in what's going on in the market, because as we've also seen in the last year, the market changes, and a lot of stuff that does work in particular markets doesn't work in current ones, or ones that we're rotating into in terms of bear, bull, range bound, etc. Then. So obviously, in the last part of this is about controlling your mistakes. So at the end of the day, if we can say, okay, this was a trade that we sold too early because we, got too money hand aggressive with, looking at our P&L, or maybe, like I said, it's something to do with chasing or revenge trading, or even having a wash trade. Maybe you're just taking a trade because you're bored and need to get into an active position there. So what the goal of using the journal is to be able to tag these and then start to say, okay, over the last week or the last month or the last year, I've been making this mistake, quite frequently. And when I do place a mistake, it is this common issue that I'm having. So then by doing that, our whole goal is to be able to say, okay, if I'm struggling right now with FOMO, over trading, and maybe even, trading off 1-minute charts, well, those are three things that I can combat with trading rules, right? With FOMO, okay, well, I have to have a set list of entry rules before I get into position. If somebody sees, post something on Twitter or chat room, whatever it might be, that's not enough of an indication for me to get into that trade, right? I have to have my own criteria, my own trading thesis, catalyst, whatever it may be for getting to this position. Same thing with revenge trading, right? Maybe you have to just check in with yourself after each trade and see if you're mentally or psychologically in the right state of mind to be able to place that next trade. Because quite often you'll hear what's called trading tilt, or trading on tilt, which is essentially when, if you can imagine a ship going back and forth in the sea, that's basically how you're treating the market based on how your head's swinging with your P&L there, right? You can imagine if you go down $500, $1,000 in a day, maybe you start to get a little bit more aggressive. You want to make that money back up quicker. Maybe you're just taking the next trade that you think that's going to be the play because you've had FOMO because you've gotten stuffed on these other trades. So there's a lot of, different aspects of this, but the main point is to be able to say, okay, these are the problems I'm making. Now, how do I make a game plan to actually execute and preventing these in the future? And if we can, prevent as many of these mistakes as possible, then obviously that goes in helping our win rate, and everything else in terms of our stats, to making sure that, we get to consistency as well as profitability as a trader. So the intention is to show you a way that might help you to avoid unnecessary losses. So kind of getting more into the journaling aspect of it, you can do this paper and pen. You don't need to use a journal whatsoever. But you can start to see that once I get into this a little bit more detail in advance, it's going to get really, really tough to get this data efficiently done on a paper and pen or an Excel sheet and over longevity of time. If you can imagine you place 5,000 trades over the next 5-10 years, it's going to be a lot harder to organize that stuff in a paper and pen journal or in an Excel sheet. So this is where we kick things off. Number one, which setups are working, right? So basically, any one of our traders that we speak to, we want to say, okay, well, if you're new to the market or you've been around in the market, what setups are working, and not only working for you, but at this current day and time. Because like I said, markets are consistently moving and we have to adapt in the way that we approach the markets quite often then. And then secondly, under which conditions are they working? So, if it's a certain type of bull strategy, for instance, maybe it's an opening range breakout. Maybe you're looking at, what is the market doing in terms of the stock catalyst that you trade with this? Maybe it was just working better for small caps, mid caps, large caps. Maybe it's to do with the actual, news. Maybe you're trading PR earnings better than just basic headlines that come out of the stock. Or maybe you're trading when the market has big macro news, or maybe it's an FOMC day that you're tracking that works better in this condition when the setup's profitable. And then finally, what am I doing that is making me lose money? So like I said, going through any lost trades and even winning trades, because quite often we have, and I've had this a lot too myself, well, I have a really, really big winner, but it was actually a trade I shouldn't have even been in, or actually could have been a bigger trade if a win, but I just got too greedy or, two hands tight on my position and I didn't actually get out of it. So same thing I tell people, go through the losing trades, because obviously those are going to have mistakes. Sometimes they don't. And they're just you following the trading plan, but it just, that portion of your trading plan that isn't right, which would be your win rate. Obviously there's not a mistake, but you just have to come back and attack the market in the same manner. So that's basically it in terms of, the big picture things, what we want to be tracking. One last analogy is to think about it from the athlete's perspective. Same thing. And the only reason why I'm harping on this, guys, is because I've got burnt out of journaling, 3 times over my 7 years. And it wasn't until I started using TraderSync and really having a set routine and saving time with it, that, I came into falling in love with it and actually, working for this company. So biggest thing is think about from an athlete's perspective, especially those people that are in the Olympics, right? These people are competing every 4 years, but they are in the gym or the practice facility day in and day out, making these minute changes and minute tracking that may not seem like an improvement if they go and journal that single night, right? Or maybe you don't seem like an improvement if you've been journaling over a week where you've been losing money. But over the course of 4 years or 8 years or 12 years, they strive to get that gold medal, which would be, for us, consistency and profitability, in a really solid trading year. So it might seem tedious and annoying in the aspect that, hey, you have a really bad day, you lose money in the market. Maybe you don't want to go and spend, time journaling that evening. Maybe you just want to chill and watch Netflix or go for a walk or hang out with your family. And that's completely fine. But what you got to understand is whenever we have these bad ruts where it's a week or a day or even just one bad trade, we have to do that self-reflection and using a journal that's unbiased for one, right? Because we can also go there and say, I won't journal. I'll just go and sit there and say, I had FOMO, I overtraded today. And I just, had a really poor watch list of stocks that I was into. Well, okay, you say that, but maybe there's other things underneath that were causing you to have those issues, or maybe it was something else to do with, like I said, the market or headline. There's so many different aspects that if you just cookie cut it and say, this is what my issue was today, I'll move on. Over the course of time, and if any of you guys are on that learning curve, aspect of, hey, you're on trade number 1 of maybe 5,000 you're going to make. If you can, shorten that learning curve and knowing exactly, okay, I've been making this mistake most frequently and cutting that out before it becomes a 2-week, 3-week, 4-week long endeavor of it impacting your account, that's where you guys are going to be making huge strides and, understanding exactly where your strengths and weaknesses are at and, exactly how to start working at attacking those weaknesses and making them not so evident in your trades there. So now more onto the quantitative side of things. What do we want to be tracking, right? So number one is, why did we take this trade? What was your thesis? What was the setup? What was the catalyst going on in the market? Number two was, what was your plan with it? So, what was your risk to reward? What was your average, levels for looking at targets? Maybe you had target one, target two, and target three. Was your moving averages or certain indicators you're using in, set up in a certain fashion? And then finally, what did you do with it? So what was the self-reflection? Did you actually execute your plan? Did you fall short of the plan? If so, why was that, or why did that happen? And now more on the numerical side. So these are obviously same things. We can be tracking every, thing I've just been mentioning these last 3 slides. We can be doing this with paper and pen, but this is going to get a lot more efficient and powerful once you start to use the software with all this. So the first thing we talk about is orders, right? So symbol, the size of the position, the price of it, and the date and time. Secondly, we have our strategies, our mistakes, stops and targets, like I mentioned, the results of the trade, and then our self-reflection, the why, how, and what. So we have the 3 methods of tracking. We'll just show you guys a brief overview. I know Michael was showing you guys of it on his end. So this is our dashboard of the journal. We also have the mobile app. So any of you guys that have an iOS or Android phone, you can go ahead and download that. It's really handy. I just like to use it if it's like something on the fly. You can, for instance, go and import your trades. But let's say you go and import your trades, that takes 5 to 10 seconds out of your broker for the most part. And then you have to go, right? Maybe you have to catch a train, you have to catch a flight or a bus, whatever it may be. You can go and start to tag and do your journaling on your phone. So as long as your trades are imported into the journal, you can go ahead and do all of your journaling actually on your phones. Maybe you don't even want to just do it in bed while you're laying down and watching TV. Depends how enthusiastic you are about it and up for it. But regardless, it does have functionality, and I do like to use it on the side there. So a practical example of how to avoid unnecessary losses, and obviously have this plotted in a trade here. So we have the trade dashboards, we have the trades listed, we have the widgets at the top you can swap out for whatever you like to view, and then we have a few other visual performance reports here on the right hand side that gives you commonalities or trends within your trading there. So from a high level, we have the results of the trade, so long or short, the return per share, return dollar value, return percentage wise, whether it's a win or loss. Then we have the actual executed orders below hand. And then as for inputs, so these are things that you would actually go in and do. It's only 3 or 4 things. So number one would be your targets if you want to plot them. So maybe it's even just one level you're trying to get out at. You can go ahead and list that numerical value. It'll show it on the chart below. Secondly, there's the stop losses. So same thing, where was your risk in this trade? It's really good for a visual context when you go and look at this maybe in 6 months or 12 months to understand, hey, this is where my risk was. Maybe I was risking too much. Maybe I wasn't risking enough. Maybe I didn't identify the proper levels of support I should have been under, etc. there. And then we have our tags. So these are our setups, or trading strategy or plan, whatever you want to call it. And then your mistakes, which quite often, like I said, are the things that we can control. So FOMO, greed, over trading, chasing, selling too early, getting caught up in 1 minute chop. All of these things are, items that we can tag and then track that over the history of we making those mistakes to see how we are performing to the better, to the worse there. So now on the visual side of things, we use TradingView for the charting API. So you'll be able to come in here, you'll see red horizontal lines plotted for stops, green horizontal lines plotted for targets, your green Qs for entries, and your X Qs for shorts. And those are obviously flipped if you're, sells and shorts. And that was the same for longs and that side there. Other than that, another nice feature is you're able to add indicators so that you can make this basically mimic exactly what you see for your TA and your trading stations. So go ahead and add your moving averages, volume, etc., and make it sure that you have the full context. Because like I said, you come back and look at this trade a year from now, you'll understand exactly what you're looking at in this trade and if you actually followed your plan there or not. Oops. Now, the most powerful report to run, and these are 2 things that I'll be focusing on here tonight, because there's a lot of reports within TraderSync and it can get quite overwhelming. So I always tell traders, if you can get even your first couple hundred trades logged, just spend every single evening, week, and the end of the month, going over these two reports. And these are the setups report and the mistakes report. Now, the big thing that I like to use these for is going in here, understanding, okay, well, what setups are working, and not only overall on my account, but in the recent, X amount of time. So how good have my setups been performing in the last week, right? I'll take a snapshot of that. Maybe I'll look at my win percentage, my efficiency, compare my wins versus losses. And what I'm going to do is compare all those numbers ratio wise to what's going on in the overall month and the last year to date. And now what that does is it gives me an idea of, okay, certain setups that I think may be working for me for this, quote unquote year actually haven't been working so well in the last month and the last week. So that's when I'm able to go in and plot notes and say, okay, well, if this setup isn't working, do I have to tweak little things like, for instance, the type of stocks that I'm trading? Maybe there's a sector rotation, and maybe I have to get into a different industry that is, fulfilling this trading setup requirement or criteria there. Same thing on the mistakes, right? If you're be able to go in here and log 200, 300 trades, you'll be able to have, say, 30, 40, 50 mistakes logged for each one of those trades. And then you'll be able to come in here and say, okay, well, you know what? When I take a trade, 40% of the time, it's revenge trading. Well, okay, if I have a losing trade, maybe I set a rule for how many max losing trades I can take in a row in a day before I get stopped out and have to reset and come back tomorrow. Or maybe I have a max loss for that overall account for the day, or maybe it's max loss per trade. Just certain things like that, so you don't get caught into revenge trading, because maybe you're just risking way too much in these trades. You get down really quick at the open, or maybe just in a matter of minutes because of how big your position is for your account, and that instantly sparks revenge trading, which, like I said, you start trading on tilt and you have no edge in the market, and you end up just taking any trade or opportunity that comes up that first comes to your eye there. Uh, One other thing I'd like to suggest you guys to get into is the management tool. Now, this is really, really, really helpful for you guys to be tracking what your essential strategy or what you're trying to execute is against what you actually executed on, which would be, your trades logged. So you'll see there's two charts here in the management tool page. The one with the circles or dots is your actual trades, and then the green line chart is your simulated P&L. Hence, you take into account this right-hand column here. So essentially how this was working is you saying, okay, well, had I stuck to X, Y, or Z because I know that these things, conditions otherwise performed well, and avoided X, Y, and Z mistakes that caused my account drawdowns, where would I be? Essentially, so stacking up, what your trading plan is compared to what you actually executed on. Now, one thing to keep in mind is that this is not factoring in you increasing your position size whatsoever. So this is more so if you're looking at this chart, an opportunity cost, right? Of looking, okay, this account right here made it just shy of, say, $13,000, but had to be exactly on the right side here, trades to avoid, not cut losses quickly, having FOMO, not my plan, chasing, over trading, revenge trading, and also trading during the lunch hour there. I've lost about $10,000 in opportunity cost, or that's where I could be. Like I said, not increasing position sizing at all, but just focusing on eliminating these mistakes. Now, this is really good if you're a trader that's consistent, profitable, as you can see this account was. It shows you obviously where you can be doing better, right? Now, on the flip side, if you're a trader that's losing money or it's been flat, it also gives you a lot of confidence and foresight to know that this trading plan or strategy that you're trading actually is successful. Because you can see here when this account was going to the red or even just barely break even, the simulated line was still positive. So this shows you that, okay, when you were taking trades without these mistakes or faults in your actual executions, you were making money. So this gives you a really, really, really good awareness. Like I said, once everything's tagged as a setup and mistake, to understanding where your benchmarks are and where you stack up against your actual trading plan, because it'll become really, really evident as you guys start to log 50, 100, 500 trades. This report's going to get really accurate for you guys and showing you, how you're performing against it. So why TraderSync? Number one is the simplicity aspect of it. So like I showed you that one slide, you really just have to go and add a couple tags here and there. What used to take me 30 minutes to an hour only takes me about 5 minutes to 10 minutes. And the nice thing about that is you don't have to spend as much time inputting things into journal cells or writing on a piece of paper. You're spending, 2 to 3 minutes actually inputting your values and tagging stuff. And then you actually get to spend 5-10 minutes doing reports, getting the actual data, and actually understanding where your strengths and weaknesses are, right? That's why I always got burnt out with journaling in the past, is it would spend 30 minutes and I'm sitting there still figuring out why I lost $2,000 on the day. And then I'm, kind of just getting burnt out, and I end up giving up journaling after 20 minutes because I'm still inputting stuff or I'm still kind of beating my head around trying to figure out where I'm at or what went right or wrong. And that's, like I said, when you're not in a good position financially with your account, the first thing that you're going to get burnt on is going to be, anything extracurricular outside of trading. So that's number one. The flexibility aspect, you be able to go and do this on your phone, like I said. We also have connections with all pretty much the brokers across North America. We're in stocks, options, futures, forex, and cryptocurrency. We also have direct integration with Webull and TD Ameritrade and Robinhood there. And then last aspect is the powerful aspect of it, right? Using this journal software, what you guys are able to go in and do is run, say, a setups report while factoring in, you want to take in the average hold time of your account, or maybe you want to factor in, like I said, market cap or the entry hour throughout the day of the week. You can start to layer in all these different variables, and because it's all tracked within the software, it'll give you these reports that, like I said, you can spend a lot more time on focusing on that than actually going in and inputting the data. So that's where the really heavy lifting comes from. And like I said, you being able to really keep things organized between what you're trying to do, which is your setups, and what you're trying to avoid, which is the mistakes. That's essentially where you can get the most amount of value, and using your journal as, like I try to tell people, is your trading coach. Because if you can use mentors like Michael and other people that you may be learning from, is essentially you plotting in what you're trying to learn and get executed from those guys, and then being able to report on how you actually are executing on that from an unbiased perspective. So that's where the really big hands-off part of it comes in for you guys. So other than that, I'll jump into questions here for you guys. Love to open this up. Michael, if there's anything else you want me to cover as well, I'd be more than happy to.
No, you pretty much did. Maybe just very, very briefly, because we've gone over time a little bit, but very, very briefly, there's some really, really cool things coming up that in TraderSync. If you just talk just very, very briefly about that.
Okay.
And then, but also I just want to note before we close off the TraderSync part is, obviously I'm in Asia, but when I start my day, the first thing I do is I journal. Or do reports or do whatever. It's the very first thing that I do. So it's critical.
Yeah. I guess the biggest thing too for you guys, since like you said, you guys are mainly options focused, we have an options flow that's going to be coming in here in the next month. So essentially on the, if I come into the dashboard here, oops, get this place. So on the TraderSync dashboard, we have these menus on the left-hand side. We're going to be having one, like I said, it's going to be called Options Flow here. So you'll be able to click into that. It'll give you all the options flow on a full page breakdown, similar to how it would look like here. And then if you were to go in a particular ticker as well, for instance, Tesla or PTIX, it also display the options flow for that particular ticker there. Other items that's coming is we're having fundamental news being added. So this is going to be kind of nice. If you can imagine what you see from Yahoo Finance or Google Finance, we'll have a breakdown similar to that, so that you can also, go in and relapse the context of maybe there was PR earnings on this stock at said date that you traded it. Other items is we got the replay simulator. So this, unfortunately, it's only going to be for stocks at the start. But as soon as we get it through, the testing of it and it's been working, and we have people starting to come in and use it, we're going to be expanding to options next. But it's essentially a replay simulator. We can go back up to 10 years in data time. We'll be able to have playlists, which is going to be a really cool functionality where you can back test. Say you maybe want to make an earnings season playlist, right? Or maybe you want to make a certain type of strategy of a playlist. Well, you'll be able to list those tickers and when they made that criteria at said date, and be able to replay that and work on identifying those patterns and developing your pattern recognition, and then also understanding where to enter and exit at the most optimal times there. It's also going to have a screener functionality, which is going to be really handy for you guys to say, okay, well, if I want to go and trade a day 2 years back, I didn't know what was going on in the market in terms of macro market news potentially. Well, at least you can go and run a screener, which will, condense those 6,000 stocks to maybe your top 10 or 20 that you want to focus on for replaying that actually time period. So little things like that. We're also going to be having a contest. This will be later on in the year, but it'll be nice. It'll be a simulated account that's funded. Not with real live money. It's just $10,000 stock account, and we'll give a set list of tickers you guys will be able to go and trade. And then we'll be giving out various prizes, memberships, and cash prizes as well there with that contest. So a lot of big things in the making. That replay software is going to be coming in the next month. The options flow is going to be coming just shortly after that. And then the fundamental stuff will be at the end of the season here. So other than that, we have tons of updates still in the bank. We have things like we have a walkaway analysis, which is going to be really cool. It'll be essentially where if you were to exit this trade, what happens if you were in this trade 5 minutes later or 10 minutes later or 30 minutes later or an hour later. So it'll start to get you an idea of maybe you are leaving profits on the table, or maybe you are, getting too aggressive in your exit analysis on that. So it'll be really good hindsight to show you guys, hey, you know what, if you're holding these trades for 10 minutes or 30 minutes later, even if it's just half your position, you're actually going to be making X amount more or less potentially, but it'll be a nice report. So little things like that every quarter will be dropping for Traders Sync.
It's cool stuff. So,
yep.
Okay, any questions?
And if there is anything that comes up, Michael, you can obviously let me know, and more than happy to either recap it in a video or whatever. But definitely ours here for you. No,
it's very useful. And I'll forward you any questions that come through, because we got this is going out to a lot of people as a recording anyway. So I'm sure we're going to get some questions about it. If you could just transfer control over to me. And I'll just continue on. We're going to do a little bit of a market review and present a couple of opportunities for the coming week. So even Josh, you might even want to think about them. So.
Right on. Yeah, I'll stick around in the background here. But thanks a lot for having me. Appreciate all your guys' time.
Thanks much for joining.
Awesome. Take care.
Yeah. Okay, so hopefully this is coming through. Like I said, I use this stuff. I would not have invited Josh to come on here unless I was using this stuff, and I use it extensively. It's the first thing I do in the morning. Okay, I'm going to very briefly touch on this. I do it every single time. As some of you have been around me for a while, I do this actually more for me than you, because it keeps me on track. I'm a huge stickler for money management. In fact, I could make money in the market if I flipped a coin. Okay. And the reason I do that is because I cut my loss short, and I enhance my wins to a certain point. And I have plans. Okay. Everything is there. I take profit, at least on a portion, at least on 60% of a position if I can, at 2 times of what I'm going to risk. So if I'm risking $250, I'm taking a profit off at $500 profit, okay, categorically. But also that is related to what the size of my account is. And I don't want to lose more than 2.5% of my account. Actually, it's more close to 2% in a lot of things. So I'm not putting stuff out there that's more than that as far as my planned loss. Okay, so I am planning to lose, but I'm also planning to win. It's very, very, very important. As you know, successful traders lose money every week or every day if you're a day trader, but they might make more than they lose. And there's a lot of reasons that people do lose, and it's really because they don't have a plan. I'll put it right to that. If you don't have plans when you're trading, then don't trade. This is a business. Okay, businesses succeed because they have a plan and they are operating to a plan. Businesses that don't have a business plan generally don't do very well. Okay, so treat it like a business. So I'm always trading to that plan. I'm never going to lose more than 2.5%. I've got to call it a paper trading account just because of the way the rules sing, but I'm never losing more than 2.5% of an account. The base account for Green Goose Trader is considering a $10,000 account. Okay. You can have more, you can have less, whatever. But again, the rule is 2.5%. I am always going to have a goal of 2 to 1 on my risk, at least for a portion. Okay, because once I get there, I can enhance that a little bit by doing things. And those of you who've been around me for a while know that I love to make adjustments. I do consider all-in trades, but an all-in trade, meaning I'm willing to lose 100% of that, is only going to be $250. In the last couple of weeks, even the last couple of months, most of my trades have been all in because the market is so funky. Okay, and I've gone into higher probability that have good high probability of success, but I have position sized a lot lower than I have normally done when we're in a lower volatility environment. Okay, so really what it means is that I've got 40 chances to be wrong. But if you go through probability and statistics, it's really tough to if you're a 65% win-loss ratio trader, it's really tough to have 5, 6, 7 losers in a row. Can it happen? Will it happen? Yes. Okay, but really, it's all about keeping your position size reasonable so that you continue to have the psychological edge if you do happen to have a string of losses. Okay, so last week, if you either attended this session or reviewed it, my take on the market for last week was that, hey, the market had been down 10 of 11 last weeks, and it was still strong momentum down with weak bounces. The big question is whether a bottom was in, or at least a temporary bottom was in, and whether it was going to come up. My gut feel was the bottom was near, but really needed to be confirmed through a basing pattern and a breakout of that pattern up. Or if it wasn't going to be the bottom, it was going to break down. Okay. And also, is there another cliff coming? So I actually still kind of have those questions open right now. But my focus for the next 2 weeks, we'll look at the market here real quick. Okay. So my focus for the next 2 weeks is through TraderSync and through all the work that I've done. I'll tell you right now, I'm good at trading volatility. Okay. And I get a better return when I trade volatility. And that means that's trading things leading up to earnings and using the crush after earnings. That is the focus of Green Goose Trader. Okay. And earnings season is coming up in a couple of weeks. So right now, my focus for the next week really is preparing for the summer 2022 earnings season. Okay. I'm mostly cash unless there's an obvious opportunity. I really don't have a gun to my head forcing me to trade. So you know what? It's okay. Flying to Paris on Saturday next week. We got a big family reunion. My wife and I, we've been married 25 years. Got a big party planned. We're meeting our kids there. And we're going to be spending several weeks in France. It's actually kind of my home country now. So, I'm going to be a little bit on holiday. But the other focus I'm doing is I really want to look at doing some in-depth studies on some key IV Russian crush concepts. And I'm going to publish that on July 5th. Okay. There will be a recording done for the opportunities coming up for the following week. But obviously that's going to come kind of like July 4th, July 5th. Okay. So there's a little bit of holiday in there. But again, what Green Goose is all about, it's about implied volatility. So this is actually, and we're going to look at AMD here. This is the volatility chart for the 7 to 30 day at the money options for AMD over the last 120 days. And you're going to see a couple of things. You're going to see earnings. That's earnings. And yeah, things kind of squiggle around up into earnings, but there's one thing that always happens before earnings. I don't know how to make this not red. You got IV rush and you have IV crush. Okay. I don't want to have a trade on that doesn't consider volatility. I must consider volatility. Okay. And what I notice right now is actually volatility is actually kind of low. I was a little bit surprised when I saw this. This is as of Friday, and this is on the 7 to 30 day options. Okay. So everything that Green Goose is going to be doing here going forward is related to how to deal with IV. Okay. I am not going to take trades. At least I'm not going to take much trades that are not related to IV until like the last 2 to 3 weeks, basically about 2 to 3 weeks before earnings season. Okay, so this last week there were some trades that I looked at based on sector analysis that really didn't consider IV as much, although the Nike trade did. Okay, so anyway, when we do this, when I look at the volatility, I want to know, basically, before I even look at this stuff, I want to know what is IV expected to do over the next couple of weeks or the next month. Okay, once I determine that, I want to filter those out and the things that are actually going to go up in IV or down because of earnings. And I want to see if there's anything that's going to trend up, down, or go sideways, knowing where earnings is. And I want to know where I'm wrong. Okay, that's probably one of the more important things is if I've got a prognosis, where am I wrong? Because if I'm wrong, I need to get out. I'm potentially wrong. I'm probably wrong in a couple of plays that I made last week. Well, for example, well, you know what? It's going to happen. Where's my price target? When is their ER? When is it going to get there? And then we're going to take a look at those and choose the option strategy in these alerts, and then write a trade plan behind it. And that's what I'm going to publish. I'm going to publish that every week, or we're going to review trade plans every week, just like we're going to do here in this particular session. Okay. And then once that happens, there's going to be an order entered. Most of my orders are actually entered after hours because I'm in Asia, I'm sleeping, or it's going to be in the first 5 minutes of the market open, or it's going to be the last 10 minutes of the market open. I'm getting up at 3:30 in the morning for half an hour just to do that. But I've got everything pre-written. Okay. And then you monitor it. Okay. But it's trying to eliminate all reasons not to enter, which is probably the most critical. And then once you do that, also understanding where you're wrong so you can actually cut your loss, but also understand what your target is so you can maximize your gain. Okay. So I'm just going to go real before we go into earnings, what's going to happen. Okay. I hope I'm recording actually. Yeah, I think I am. Anyway, let's just look at the market real quick. And I'll tell you right off the bat, I'm not looking at placing much in the current market state, okay, especially as we go into the holiday periods. Okay, so let's just look at SPY. And last week, we identified the fact that we had actually come down into the target, potentially bouncing up. I didn't think we were going to bounce past the 38.2, but we actually had a good solid bounce up to a key level. Okay, and I can just redraw this real quick. Okay, so that target is still down there, and we had this little green box where if things broke out, it could actually go. Okay, and then if you get a bounce and you come back down, then you would have a certain expectation of where to go. Okay, so when I look at things like this, I look at fibs. I look at them really strongly, and if you take the first fib on the most recent pivot high down to the most recent pivot low, you can see that we bounced and we closed on the 50%. That was a pretty strong close on Friday, and it wouldn't surprise me to see us do one of two things: go up but get stopped flat on 61.8, or consolidate a little bit and come down just a little bit. I don't see a lot of move happening in the market right off in the beginning of the week, but I do see a pretty good strong possibility that we can continue up. But I'm not willing to put anything out there right now that says this is what it's going to do. So I'm as many have heard me say before, I'm bullish. I'm bullish to the point where I don't think there's going to be huge moves this coming week. We got a holiday coming up in the US with July 4th. and people are on vacation, and who knows? I think I just looked at the futures, and it was down a little bit. It doesn't surprise me. It wouldn't surprise me if you had a little bit of an inside day. I think there's going to be a lot of fading this week. So those of you that like to trade butterflies and think that you can get into something, early in the week for that weekly, a butterfly centered right around this 50% probably could be a nice play. I'm not going to personally do it because I'm focused on something else, or even an iron condor. There's I've recommended in my Substack Arachlum. Take a look at that. Holy crap, this guy is awesome. He's an economist. He's got a really cool class coming up I'm taking. But he predicts on a weekly basis, and then he plays iron condors. So I really love his style. So check that out. And I don't get compensation for any of that. I'm not looking for that. He's just very, very interesting. So anyway, if we do happen to bounce here, or if we start going back down, my expectation would be if we actually stop at that 50%, my expectation would be that we're going to take 100% extension, which is actually right here. It's down at the bottom side of this box. If it doesn't, hey, it's going to go up. That's great. It's fantastic. If we bounce on the 61.8 again, and we fade it back down, I'm going to expect it to come down to the 341 range. So that's one scenario. But if we get past this, we do have a trend line coming down. And if we break through that, that's actually really good for the market. And if we confirm it out, I think there's a pretty good possibility we could come back up and certainly test these pivot highs. So I really don't know where it's going to go, but I'm not going to focus on that because I'm going to focus on implied volatility and where implied volatility is going surrounding earnings. That's how I'm going to make my profit, and that's how we're going to focus in Green Goose. And hopefully that's going to work out the way it has in the past. So one of the names that we looked at last week was Nike. Okay. And Nike for me was a really strong candidate. Even though it initially didn't do so well, I was still pretty strong. I looked at this from an implied volatility perspective, knowing that earnings was going to be coming today. Well, today for me, tomorrow for you at the end of the day. And when we did this webinar last week, let's see, where was it? Okay. This is where Nike was. Okay. And this little box here was very long-term support and resistance. Okay. So I took a calculated risk in a position going up, knowing that IV was going to start coming into the play. Okay. So I got into a position, and the next day I got into a position, and I got in at a high, and then boom, we came down. I stayed in because I was position sized as an all-in trade at a 250. And here's where we are right now. That trade right now is up 75%. Okay. And the way I look at it, the reason I'm showing this is because this is really where I'm focused. This is absolutely where I'm focused on potential plays. Not for this week so much, more, well, actually there's one this week, but also what's going on for the next week or two. And we'll go into that here in a second. Okay, so what I use to look at IV is Tom's. I use Tom's option tools. I'm gonna probably have Tom on here as well to talk about this, or his developer, his exclusive developer at options analysis. So I take a look at the saved trades, and I've got one on Nike that's in. And as of Friday, so as of Friday, so yeah, this came down. As of Friday, it was at 70 at the close. It was 77% ROI. Okay, this is in TraderSync as well, and you can see what has happened is IV has come up. Okay, and I'm expecting IV to go up a little bit more on Monday, and my intention is I will
Michael?
close this out. Hello. Yep.
Hey, I think your charts or your screen share isn't working. Sorry.
Oh, is it not sharing anymore?
No.
Okay. Let's see. How do I do that? Let's see. Okay. Share screen. Ah, okay. There we go. That's because I went around. Okay, so hopefully that shows now. That's because I switched screens. I'm still trying to get used to Zoom. Anyway, hopefully it's showing. So my point is Nike's IV is going to continue to go up into earnings. And hopefully, hopefully it goes up a little bit. And, hopefully when I maintain this 77.5% or more in this particular play. I'm only in one contract. So I actually have an order out there right now to sell it at 100% ROI, and I'll be happy. If it doesn't hit and Nike at least stays where it's at, IV is going to come up. I should be able to get out for 77.5 or, maybe 60%. I'm going to be happy with that. Okay. So the point being is that we're going to have opportunities to take a look at how to sort stocks in the future. And I'm going to use things like Tom's, where I'm going to sort things based on what is reporting. Okay. So I'm going to go in and I'm going to do an earnings ranking. And I'm going to find out, and this is you can do this with other things. I want to find out how many calendar days there are to the next earning. I'm going to sort all the stocks. I've already got this preloaded here, but it's my stock list. And I'm only going to be looking at right now, tonight, I only want to look at the stocks that are reporting the first in the series. And that's actually about 2 to 3, 3 weeks out, 19 to 22 days. There's a few others that are coming up. Nike, obviously, Micron is reporting as well. We'll look at that. So what I want to do is I want to look at these particular stocks and does their IV actually line up and can we expect IV to go up and then also down? So really, I only want to look at these stocks right now. I don't even want to look at the SPY. It's going to do what it's going to do. I'm much better trading this stuff. Okay, so when I go in, I can start looking at just an IV chart to get an idea whether I want to look at these things or not. Okay. And it's my stock list. And I only want to look at an IV chart, for example. And I want to look at, let's see, I'll just go with a 7 to 30 day IV. Okay. And so the first one reporting is Pepsi. Okay. So, and you can see that the IV is gone all over the place, but it does go up into earnings generally. And we're kind of down on this bottom leg. So, do I want to look at that? So I want to get a general feel about what's going on and when things start actually moving up before earnings. And usually on Pepsi, it's about 4 days. Okay. You just kind of eyeball it. And you can kind of go along and look at these things on each one. This BlackRock, I don't like trading this one, but the other thing you notice is on earnings, it crushes. Okay, BlackRock always reports before market opens, so that's why it looks like this. So your IV is the night before and on earnings, night before and on earnings. So this is going to get me a general idea of where we're at in the implied volatility range and whether I'd want to even think about taking a trade leading up to earnings, like Delta. I've liked in general playing Delta Airlines over earnings, but usually I don't like playing it leading up. And right now, IV actually is kind of in the middle. That means it could go up, it could go down. And then just to get a regular snapshot before I actually go into trading view, I like to look at just the regular stock chart, okay, of all these and say, is there anything that really is got an interesting pattern from a 40,000 foot range to take a look at a directional plate. Okay, so Pepsi, it takes a big dump, comes back up, marching candles, maybe some resistance up above. Doesn't really speak to me very much. BlackRock, look at that channel coming down, so not a huge fan of that one. Delta actually is really interesting to me because we are in a potential basing pattern. And knowing that we're in a basing pattern, potentially that there could be a breakout on the downside. If there was a breakout, knowing that there's earnings coming up in 22 days, if there were a breakout, this goes on my watch list. Absolutely goes on my watch list, because I would want to jump onto something like that if we had a breakdown, using an expiry just after earnings, knowing full well the IV is going to get juiced up as well because of the earnings coming up. So Delta goes on my list, DAL, and it's a watch list. Another basing pattern, JPM. We actually made money on JPM last earnings season on a directional play. So this also is on my watch list, definitely going on. Could even be on a watch list going in MS. Same thing, MS, basing pattern. Would I get into trades tomorrow? No, I wouldn't. I need to see some kind of confirmation or breakout. Okay, so MS. Taiwan Semiconductor. It's basing, but you got this slow movement down. They really don't have that great options. So Alcoa, basing pattern. Another watch. Conagra, crap options. PNC Financial, basing in a channel down. Okay, so PNC is another one. So you can see the first ones to report actually in the season are generally going to be the financials. Alcoa is always in the first, so is Delta Airlines. UNH, I had a losing trade on UNH. I got faked out. I thought it was going to go up. I'm not overly excited about this one, to be honest. I don't like to get burned twice, but I've never really done well with this particular one, so that's just going to get rid of that one. BK, basing, doesn't really move very much. Wells Fargo, basing, WFC, on my list. All banking stocks, but again, nothing there really as a solid trade. US Bank, basing, but you can base a long time. So once it breaks out of base, goes up, fantastic. Ride the wave, ride the volatility wave as well. So I really want two bangers. I want the directional and the IV. Okay, I think that's coming down to my list. Yep, that's done. Okay, so really on my watch list for earnings coming up in a couple of weeks is Delta Airlines, JPM, MS, Alcoa, PNC, and Wells Fargo, WFC. Okay, but there's nothing really there right now, so it's really going to be a watch. So this is where the premium subscribers of Green Goose is. I'm going to be watching these things. If we see a breakout, man, I'll tell you what, I'll go in, I'll take it, and I'll be looking for expiries in the 30 Delta. You saw one of my articles about why I choose 30 Delta, and you're going to see me going with expiries with the same week as the earnings. Okay, so that's what I'll be looking at. Nike. Let's just look at Nike real briefly. Okay. Nike is really interesting because Nike has two things that happen with it. Okay, first of all, we've gotten the nice rise, and I'm going to pull profit out of this thing. Pretty sure I'm going to pull profit. I'm going to be exiting Nike on Tuesday. That doesn't mean you should, because I'm in it, doesn't mean that anyone should get into this, because it's done. This play's done. Okay, it's profitable. But Nike has a really nice volatility crush on earnings. And historically, the historical integrity is that the movement of Nike does not overcome the volatility crush. Therefore, if you sell an iron condor, it has a historical integrity of having a greater than 75% success rate on profiting. Okay, so I am looking at actually getting into a Nike iron condor on Monday to take advantage of the volatility crush. Okay, and it's going to look like this. Okay, this is the very last earnings play of spring season, or maybe it's, I don't know, maybe it's the first of summer season, but this is the very last. Okay, over the last 4 earnings, there have been 3 wins and 1 loss with an average win of 43%. I will be doing 30 of these things or so over the next month and a half to 2 months. And if I stick to my guns and going with plays that historically have paid 75% win-loss ratio, generally I'm going to have a 65 to 75% win-loss ratio going forward. I will have losers. It's just the way it is. Okay. But Nike is one of them. And those of you on Tom's or any other kind of software that allows you to take a look, all you got to do is do a little back test, and you go back 1 year and take a look at how did it work. Okay, so I'm just going to go back and show you 1 year ago on Nike. Let's see, I get a couple of days earlier. Usually they report on Mondays. Okay, so they report on the 24th. Just 1 year. So this is exactly 1 year ago. And the way I look at that, at the end of the day, the last half hour, is I go in, for those of you who are familiar with Tom's, I take a look at the at-the-money straddle price. So at the money actually is the 134 or the 133, and I add the mid price 320 of the put and the call. So 286 plus 320 is roughly $6. Okay, and then what I do is I take 134 minus 6, which is 128, and I place my short and my protective $1 out, minimum $1, and then I take 134 plus 6, that's 140, -1, and 1. Okay, and I do this the last 30 to 15 minutes before close. All right, I go with my broker and I look at what it is, and I'm able to get 39 cents on 61 of risk. Okay, and it sets me up for a 24-hour iron condor. I love this because we're have a nice boundary with support resistance, and then I position size it to the risk. I don't want to take more than $250 of risk, therefore I'm able to get into 4 contracts. Okay. And then you can save it or whatever, or do whatever you want. But this, again, this is just the back test. And then I just advance it a day. What is it that I had at the end of the day? So out of the last 4 earnings, this was the loser. It's okay. So this particular, it went too far beyond. Okay, so but I do a back test and I set this thing up, and this just shows you this particular concept that is it fail safe? No, you're going to have your losers, but but if I'm using something that has a 75% win loss ratio, I'm going to win out over the long term on everything that I'm doing. So I lose 250. Actually, I only lose $250 on this, and you know it expires the next day. So this is a loss, but it's understanding that. Okay, so that's what I'm going to be doing with Nike. I'll be selling my call for a profit. And in a lot of ways, what I'm doing is I'm parlaying my profit on the call into the risk of an iron condor. Okay, so I'm doing that. What else is reporting this week? Micron, MU. Okay, so Micron is a little bit interesting, and there may or may not be a play there. They're reporting on the 30th, which I believe is Thursday. And depending on what the market does, there may be an opportunity to do some kind of directional play, with the understanding that this needs to be an all-in play. It needs to be directional, and we need to look at volatility as it goes up or down. Okay, this is not an iron condor candidate. It does not do well with the iron condors over earnings. Usually it moves greater than the implied volatility crush, or at least it doesn't. It does that in not a good probable way. Okay, so let me just move this so I can look at it better. So this is actually previous support and resistance. Let's see. I'm trying to, oh, never mind. I'll just do it this way. So you can see prior resistance broke out, came down, and usually previous resistance, when it breaks out, becomes support. Okay, so I got that red line as a potential support. We've definitely been in a downward channel, but we broke out, we're hitting that resistance. Is it going to come up? So really what's going to happen is really critical, and I'm really not sure what to do with this, because for me, it's maybe a little bit more risk, except the fact that I know about volatility coming in. So we actually had just a little bit of a resistance and an inside day. I might consider taking this long with a really, really low risk type of play, with a target of that right there. But the options are going to be expensive. That's the problem. So I might consider, depending on what the IV is going to be doing, and we can look at it actually. We can look at it right here. Sorry. Stocks, charts, stock charts. And I'm going to put MU on here. And then we're going to look at AMD. We're in the base on MU. And what is IV doing? Sorry. So IV has been choppy, and it's got this zigzaggy thing. So IV actually could be a little bit low, but it could come down more. But we have earnings happening. So I might consider going into something depending on what the chart is. So for those premium subscribers here, I may or may not put an alert out on MU at the end of the day on Monday. I haven't decided yet. I really need to see what the price action is. If we broke up a little bit, or we closed up, I think I probably would. Or if we had an inside day, I think I probably would. And if we actually gap down or traded down and then back up, and we showed a really nice, maybe like a hammer type of candle, I might consider it as well, and go in with a 30 delta call expiring at the end of the week. So the jury's kind of out on this one. The other one I like is AMD. Okay, and this is a little bit more intriguing to me because we've been in this pattern here. We have support resistance kind of down in this area, and you can see that's kind of down in this area. And the likelihood of it actually breaking through that, unless the market really totally goes down, is, for me, it's kind of low. But we also have this top side up here. So I'm thinking that there could be a really nice play here, because we've got a little bit of time before earnings, which is in the middle of July. So if we see a pattern here that tells us we need to get in, which means it breaks out up above and closes up here, then I'm interested in taking it up. Okay. And I do expect it to go to this line. Probably won't break out until after earnings, but you never know. But we could come up and come back down. I don't know. So, but it's going to be accompanied by IV increase, no matter what. And AMD definitely is one of those that's well known and does experience a pretty good increase in IV. Oops, sorry, this is MU. Sorry, I was looking at the wrong one. MU. So MU is probably, yeah, MU is already kind of high. Okay, but AMD is on the low end. Okay, and I know what's going to be coming in. So what I'm going to be looking at tomorrow, depending on what happens, I'm going to put a trade plan out on this one, by the way, is tomorrow on Monday at the end of the day, I'm going to be looking at the price action of this, and I'm going to make a decision on whether to move forward or not with it. And I'll be looking at, if I were in it today, which I'm not, what I would be looking at is I would be looking at a 29 July expiry. Let's see. Sorry, I got an update. And I would normally be looking for about a 30 delta option. So kind of out of the money. So maybe I'd go a little bit higher, but probably up to about the 90 because there's really good volume behind it. So I'd kind of be looking at that right now. And I'd have a stop on here, a $250 loss. Okay, so it is a little bit expensive right now, but I would expect that to go up. And with the delta at about 37, we're kind of we're a little bit beyond the sweet spot, but we're still in a sweet spot of increase of the gamma as it goes up. So I'll be looking at that. Okay, so when we get into the premium section, what I'll be looking at doing is, I've done this already because I want to get off here in the next couple of minutes. Nike earnings, I can tell you right now, first of all, I'm going to be selling my calls and I will be doing an earnings iron condor. Okay. Win or lose, we'll see what happens. I'm going to win on the call, but we'll see what happens on the earnings iron condor. I want to get into this thing based on the historical integrity of the strategy over the last year to 2 years. I've done the back testing. Yes, are there losses? Yes, but there's a lot more wins than losses. Average of 43% ROI on $250 offsets the one loss that I made for $250. Okay, so and I want to make as much as effing possible. Okay, so the exit on these earnings iron condors is 15 minutes before market close. Exit last 15 minutes, market open. So yeah, so that's the end of the day. So I will be doing this. Okay, so normally in these sessions we're going to be writing these trade plans. Okay, the second one I'm going for this week, possibly, depending on the price action pattern, is AMD. I like the chart. I know that IV is going to start coming in, and if the market really does bounce, is going to go up this week. It's gonna be a play that is going to make money. But I'm gonna keep this on really short purse strings. And if I see any weakness, I would be getting out of this. Okay, so I'm not really into getting into a lot of plays right now. I really want to prepare for earnings season coming up so that we give the correct alerts to the premium subscribers. But there's definitely, I think there's potentially a directional bias with some IB increase. You can look at other types of plays on AMD. I would not be opposed to either a broken wing butterfly expiring before earnings, or which would allow me to get in and make some profit. This is actually kind of attractive. I also would not be opposed to having some kind of calendar with the long leg expiring after earnings and the short leg expiring before earnings. Okay, and you see that the sweet spot is 95, and 95 on the chart is right here. Okay, so, and that would expire right around here. You'd see it come up, and then I would get out if it ever hit my my short leg right up in there on the, I think on July 15th, right here. Okay, so it would have to come up to right about there. And if it did that, that also is an interesting play, but really I need to see some price action though that says, yes, you should get in. I do not expect AMD to get out of this consolidation, this wedge before earnings. I also will not take AMD into earnings. Okay, so those are the two plays that I'm looking at right now. Again, the market itself, I'm bullish. Let's see what happens, but you know, I'm not going to trade that. If you want to get insight into how to trade a market and with market predictions overall, strongly suggest that you take a look at Oraculum. It's called Oraculum predictions. Really good stuff. I think you know, I'm hopefully kind of joint mentoring there. I'm going to teach him how to do some other things with some options, but he's got some really cool stuff. But anyway, so that's that is the live stream tonight. Again, this is recorded. It's going to be posted to everyone that is on the free mailing list. Well over 1,000 people now. So, you know, it's, and if this is of use, please share it. I mean, I'm all about education, and I really don't want BS through this stuff and noise. It's just, you know, take this stuff as educational and try to learn from it. And if you can become more profitable by doing it, fantastic. So if there are no questions, please let me know. You can email me as well, and I will jump off. Okay, no questions. Thank you very much, everyone, and happy trading week. And if I don't talk to anyone directly via email or whatever, have a great 4th of July, and enjoy your holiday and summer period. I'm going to be swigging some nice red wine in Paris for several weeks. Cheers, everyone.